All right, folks, welcome back. So we're going to do a little bit of a quick summary and recap. I'll try to be as brief as I possibly can. All right, so we are looking at the daily chart of the Emini S&P futures contract for September. Small little gap under here with this low. Okay, we'll come back to that in a moment. But notice how we ran up to the area I mentioned we would likely trade to when we were in here in the volume imbalance. Traded up to that level there. We broke down. And on this day here, I made public record of 40.80 being my objective, and then I gave the last week's low of the week. And I'll let you guys go through that and find that on Twitter. But it broke lower, and today we opened, traded down, cleared the sell side liquidity here, repriced, close in this fair value gap here, so the buy side imbalance, sell side inefficiency. What was missing in this range between this high and that low, sell side had offered it today. This low here, that is the 39.13 level you watched me mention in the recording from this morning's session. Again, I'll link the short little vignette video for my Twitter feed in the description. So here is that fair value gap. Here's the low of the gap. Here is the high of the gap. And here is that old low, 39.13. So we had market trade up into fair value gap here. Once more, this to me is important going forward. I don't know if we'll see that, obviously, before we close the week out. But I think that might be an interesting draw on liquidity going into next week if we don't obviously make a run for it sooner, which really in my mind doesn't seem likely. But hey, anything can happen, folks. Anything can happen. But the market dropped, created a small little consolidation, relative equal lows, or sell side below that, finding some support at that old fair value gap high. Then it broke lower, trading down below 39.0950 level, which is the low of that fair value gap on the daily chart, and clearing that 39.13 level, which is the orange level here, and ultimately having a reversal day going into a run on this high here and back to this old area of order flow. 15-minute time frame, order block. Here's your dealing range from high to low on the 15-minute time frame. Consolidation, we broke above it, cleared buy side here, and into this area here, which is institutional order flow entry drill. You'll learn about that. The market drops, closes in the fair value gap and below 39.13 level, and ahead of noon, had a little bit of consolidation here. Once more, afternoon, lunch hour, we broke lower again, traded into the order block, rallied higher, fair value gap here, accumulated again at the high of the fair value gap on the daily chart, 39.22, rallies to the old area back here and above this high there, and cleared 50, and that was it for the day. I had something I had to take care of later in the afternoon, so I wasn't able to trade the 3 o'clock hour setup, which was in here, which I'll show you when we get into the lower time frame. Ultimately trading right to perfectly the order block here. Fair value gap, up close candle, opening. Why the opening? Why not the low, Michael? We have a wick. So whenever we have that, that is a immediate draw your eye to the body of the candle. And that's why you got that precision delivery there. Don't worry, it'll be in my books. All right, so we have the afternoon session. This high and this high. Note that 39.38 level is this high here, and the 39.29.5 level is this high here. Okay, and every other level is what we've noted from the morning session. All right, 5-minute time frame. Get through this a little bit quicker. We have a swing low here. Now, why not this one? Because this one was the actual pump right into it. You can be aggressive with that. It draws up into that. My private group knows exactly what this is. Bounce price range. Institutional order flow entry deal sells off. Short-term low. That's where the market structure shift occurs. There. and we see it trade up into it there. I was not in front of my charts at the time. You can see there is no errors there. I couldn't enter. I wasn't in front of it. I was waiting going into the 9:30 opening. We traded up into it here, and here, and here, and here, and right on this candle here, I felt that we had hit it, and we should have moved lower. The next candle, we had 10 o'clock news, so I had a little bit of a heat on that, but not much. The high here I mentioned in my commentary, that high should stay intact. Why? Because we had a swing high here after filling the fair value gap, also with all this movement lower. Lots of liquidity below here, and then that daily low, that orange level at 39.13 level, that was a draw on liquidity. I did not have these levels outlined here, but it was on my other time frames. I'm just drawing your attention to it, and I mentioned it in passing in Twitter when someone was asking, how did I come up with a bias? There's sell side below here and a fair value gap. So I sold short and sold short once more, but not at the highest high. It was lower in the candle. You'll see it. Draws down below the lows. I took a partial, then another partial, and then when it went below 39.13 I closed the final portion right before this run up. We'll get into this here because that is an ICT human error that I tried to finesse, and I'll explain that. All right, so here's that high I gave you on the chart. I asked you, what do you see? This right here, this was a draw on liquidity. Okay, in other words, if we trade down to these levels here, close all this in, and we have a shift in market structure, the market's going to want to come back up to this level here. Why? Purge and revert. Intraday version of it. So we went down below fair value gap and below the old low. We've seen that here, and I'll get into this in a moment, but here's the entries. Not the entries, but here's the swing high, and swing high. There's three of them here. So that is the intermediate term price high, and the market breaks lower. This movement here, right here, after the news. Now, listen, after the news, we have this drop down. The imbalance exists in this one, so that makes this an intermediate term high. So the return back in here, while I did not take it, and you see this in the recording of me engaging here, it goes right into there and completely taps the fair value gap high again perfectly, folks. That's algorithmic, okay? That's not harmonic. That's not supply and demand. Small little retracement up in, bearish order block, these last two up close candles, sells off, trades below the low here. Now, ahead of lunch hour, I had to step away from my charts, and I saw this fair value gap. So what I was thinking was, when we were up here, if it drops back down here, I'm thinking it's going to probably do that after lunch or towards the tail end of lunch. So around 1 o'clock in the afternoon, it should drop down into here. If I'm in front of the charts, I would obviously do something differently, but I didn't want to miss it because I obviously wanted to show you something pertaining to that high back here. Well, the limit order I placed on it filled. And when I got back to the charts here, I was like, okay, it's potentially offering another opportunity in here. I'm going to buy some more of it, and I'm going to take my exit here. Why was I thinking that? Because we had this low and this low here. And when we dropped down into that order block here, I bought one more time. I realized that I was already offside. I was too soon with entering. Why? Because I felt that this low was going to hold and this low was going to hold, and it didn't go below it. And this is that low end of that fair value gap on the daily chart. So this was a premature entry, and I tried to finesse it because I was thinking, okay, if it could just pop up into here or get really close to it, I'll move to the sidelines, and then I'll watch and see these relative equal lows taken out, and I'll take that trade later on in the afternoon. Well, I was able to get out, obviously, here. But the point is, this was a limit order filling too soon. This is the problem with entering your limit orders right before or at the beginning of the lunch hour, noon to 1 p.m. New York local time. Sometimes price can come down or up in deference to a sell limit order. It can fill you prematurely. And I knew this going in, but I wanted to obviously have something to show you in the afternoon session, but this simply couldn't be in front of the charts at the time. So it filled it, and then I tried to finesse a little bit here to get something out of it before we ran below here. Okay, I felt that we were going to stay above this low. We did. But this was simply me trying to work out a premature entry. That's all that was. And you can see the excess here. Now, zoomed in again. All right, so you can see again here is the fair value gap with a limit order filling on this candle here as it drops into midpoint of this low, this high. That candle right there fills it. And then coming back in, I was looking at this as all these movements lower and back into this fair value gap there. I was looking to go long on that. And it had a little bit more retracement than I was wanting to see, obviously. But I was trying, like I said, trying to finesse a run potentially towards this fair value gap. I didn't need it really to go up there. All I was wanting to do was see if it can get close to this high. And then everything I put on would have been covering costs and just a little bit of, fluff for the trade. I got out of it here. It did trade up to the fair value gap, but again, I want to see it go up one more time on this candle, but it quickly came back in. So the next candle, I just, okay, I'm going to close it here and be content with it. In hindsight, it was a better hold if I would have held on to it, but that's okay. It's during the lunch hour. So I had to work during the lunch hour at the beginning of it, the first couple minutes of it, to work myself out of the New York lunch price delivery. So we had a short-term shift in market structure here. Fair value gap, it breaks lower one more time into a fair value gap here, then attacks this here. Now think about what's occurring. You trade down into that fair value gap, these two blue lines here, and below that old low, that orange line on the daily chart. So those levels from the daily chart are being transposed over to this 1 minute chart. This is not noise, folks, okay? This is the market trading back down in outside of the fair value gap, below the relative equal lows, but we had this low and a lower low, so stops have already been ran down here, and a very deep discount below the fair value gap low, below that old low. So when the market trades down there, that's what I was afraid of here, these lows being taken, because if it's going to go below these lows here, like this, and goes deeper, it could blow out that low, and obviously I could be wrong if you go lower, right? So I'm thinking here, these are potentially going to be relative equal lows. So I don't want to hold on to that because we have that whole hour between 12 and 1. And here's the end of lunch hour right here. And at 1 o'clock, what happens? We have the market trade higher. Fair value gap. Market trades up into the 39.38 level, which is not shown on this chart here, but we have buy side resting here. It trades above that. So we're going to go into the details on the afternoon at 2 o'clock. The market trades down into that 39.22 level. That's the high of the fair value gap on the daily chart. We trade down into it. And then we have displacement. Short-term swing high broken. Fair value gap. Trades down into it. Long. Stop below this low. Right here. We already had stops taken here. There's no reason for me to think that it's going to go below that. If it does, that's fine. I'll just wait for a later entry if there's another one I can take. If the market rallies, I'll take a partial, and you can see that actually occurring in the short little vignette. Market drops back down into a small little fair value gap here, rallies, consolidates around that 39.47 3/4 level. Again, that's seen when we were looking at the hourly chart in the 15-minute time frame. Trades lower, fair value gap here, overshoots it, doesn't quite go below that low. This is a little muddy in my opinion, but I would have been interested to take a trade on this fair value gap here, which I did not. You can see this is all I had here. But we have a short-term shift in market structure here. Fair value gap dropping down in for the last hour of trading, and here's that 3:33:45 window where the market on close algorithm runs, and we see it trade into it here one more time, turning, and then accelerates into that 15-minute time frame bearish order block. Trades right to it, to the point, to the tick. Okay, you can't get any better than that, folks. Can't improve upon perfection. And the market goes into a sloppy little range within the range of the high here, and this low. So if you found this one insightful, and I'm going to try to do my best to come up with an approach to do this in the morning session, because this is obviously both the morning and afternoon, AM and PM session, so I don't want them to be this long, and I don't think I can do them together like this and keep them short. So the idea I've tossed out on Twitter, and you can support the idea with the thumbs up on this video. If you don't like it, obviously, then it really won't matter, because I'm sure there's going to be a lot of people that want to do it, and I kind of want to do it anyway. I've been putting up core content from the mentorship, so that way you can study that. That's the language of what I teach. It's not mentorship, okay, but it is the videos that I used as prerequisites for my private group, so that way they understood what I was talking about, and that way it kind of frees me up to be who I really am out here on YouTube and talk openly to the degree that I want to talk. Okay, I'm not going to go into every detail and every facet of the algorithm, because it's not necessary. I've already given enough. But I want to kind of go into short little reviews on the morning session and in the afternoon session. And I believe I can probably get them at around 5 minutes average length of time. So I'm trying to come up with a format where what time I'll have them done and what type of procedure do I want to go with. So that way it's always the same thing. You know what to expect. You can test yourself, compare and contrast your notes. If I've taken a trade, obviously you can see I've pushed the button here a couple times today. You can test yourself in regards to that. Okay, and we'll compare and contrast our notes each day. 2 videos, two short little videos that would hopefully help you in your pursuit of understanding price action as I teach it. So until next time, not for a world tomorrow. Don't trade it. Be safe.